The Beijing-Shanghai High-Speed Rail, operating between China's capital and financial center, is known as the most profitable high-speed rail line in China. Recently, with China's economy continuing its downward trend, the passenger numbers on this lucrative route have significantly decreased, leading to a cooling of its performance. You might wonder why such a vital high-speed rail line, connecting two of China's key economic and political centers, would experience a downturn. Welcome to another perspective on finance. We aim to reveal the social and economic trends of China and market dynamics, helping you make informed decisions in the complex and ever-changing economic environment. We hope you'll subscribe. Let's start by taking a look at the latest financial report. Both revenue and profit for the Beijing-Shanghai High-Speed Rail showed year-on-year declines, especially in the third quarter, where the performance not only failed to meet market expectations but also saw a significant drop. For the most profitable high-speed rail line in China, this is not a good signal. The key issue is that the reason behind the decline is not just competition from civil aviation, but a deeper issue: China's overall economic slowdown, leading to reduced travel demand, especially for business trips, which severely affected the high-speed rail's passenger flow. The Beijing-Shanghai High-Speed Rail, which once stood as a goldmine for high-speed rail in China, was considered one of the most successful high-speed rail lines in terms of revenue, passenger traffic, and social benefits. However, over time, especially with the economy entering a new cycle, the performance of the Beijing-Shanghai High-Speed Rail has started to show signs of fatigue. According to recent data, for the first 3 quarters of this year, Beijing-Shanghai High-Speed Rail generated a revenue of 32.355 billion yuan, a year-on-year increase of 4.77%. Its net profit was 10.015 billion yuan, up 12.35%. These numbers look decent, but the problem lies in the third quarter performance, which was disappointing. Especially during the holiday peak season, passenger traffic and profits not only failed to increase, but actually declined year-on-year. For Beijing-Shanghai High-Speed Rail, this is a wake-up call. After all, the third quarter is usually the strongest for high-speed rail performance, particularly with the summer and mid-autumn travel peaks. To see a decline is undoubtedly a concerning signal. You might wonder why this artery connecting Beijing and Shanghai is being so heavily affected. The answer is much more complicated than you might think. First, the economic growth of Beijing and Shanghai has started to slow, especially in the tertiary sector, which has seen a noticeable decline in growth compared to a few years ago. The frequency of business trips and demand for business travel is gradually decreasing. In addition, low-price competition from civil aviation has significantly impacted the passenger flow of the Beijing-Shanghai High-Speed Rail. Airline ticket prices have dropped, with economy class tickets for flights from Beijing to Shanghai now priced under 500 yuan, which is cheaper than the second-class seat price on the high-speed rail, which is 600 yuan. You can imagine that business travelers who would normally choose the high-speed rail now have the option of flying for a lower price, leading to reduced passenger numbers for the high-speed rail. Moreover, this is not just a problem for the Beijing-Shanghai line. National rail passenger traffic is also declining, especially for long-distance travel. Data shows that in the first half of this year, passenger traffic on the Beijing-Shanghai High-Speed Rail decreased by 1.1% year-on-year. In contrast, national railway passenger traffic reached a historical high, with an 18.4% increase. This means that while overall railway travel demand is increasing, core lines like the Beijing-Shanghai High-Speed Rail are experiencing a slowdown in growth, reflecting the broader trend of economic decline in China. Another factor contributing to the decline in performance is the increase in high-speed rail ticket prices, which is becoming increasingly apparent. In May this year, the China State Railway Group announced a price hike for several major high-speed rail routes, including the Beijing-Guangzhou and Shanghai Kunming lines. The price increase wasn't just for tickets, but also for service improvements on some high-end routes. For instance, tickets for the Fuxing high-end carriages are 37% higher than regular carriages on the same trains, but this price increase has not deterred demand, instead showing the potential for high-end services. However, the problem is that, although high-speed rail prices have been raised, passengers are not necessarily willing to pay more, especially for those who already feel that travel costs are too high. In fact, many people have started to realize that high-speed rail may no longer be the only option, as price competition from civil aviation makes the advantages of high-speed rail less obvious. So, even with price hikes, the Beijing-Shanghai High-Speed Rail is still struggling to reverse the overall economic slowdown. The weak performance of the Beijing-Shanghai High-Speed Rail actually reflects broader issues in China's economy. Many people may remember the years of rapid economic growth, when consumption enthusiasm and travel demand were at their peak. But now, with the economic slowdown, particularly in the manufacturing and services sectors, consumer purchasing power and travel demand are both declining. For most people, earning money has become increasingly difficult, and consumer confidence is gradually fading. This year, the government introduced a series of economic stimulus policies aiming to boost economic growth through infrastructure investment. However, the problem is that even with investments in railways, highways, and infrastructure, it is difficult to generate the same level of economic stimulus as in the past. The iron and public infrastructure model that worked in the past is no longer effective because people's needs have fundamentally changed. Infrastructure construction, while still appearing to be an economic stimulus measure, is showing diminishing returns. Due to sluggish consumption and investment, large-scale infrastructure projects cannot drive real economic growth. In fact, the implementation of infrastructure projects is largely to stabilize economic growth, but from a long-term perspective, such stimulus policies may not lead to sustainable prosperity. Some might argue that, despite the decline in rail and high-speed rail industry performance, the overall transportation industry won't be greatly affected. However, this is not the case. Not only are high-speed rails struggling, but many newly opened rail routes are also facing low passenger numbers with growing losses. This is particularly true for many newly built lines in recent years, which often fail to achieve profitability due to insufficient demand. Look at the automotive industry as well. In recent years, sales have been declining, and even the growth of new energy vehicles has hit a bottleneck. Consumer demand for car purchases has dropped significantly, and there is growing hesitation in making purchases. You can imagine that the sluggishness in the transportation industry is actually a reflection of China's broader economic decline. As living costs rise and income growth stagnates, consumers' willingness to spend naturally decreases. This trend is also evident in broader consumption sectors. China's retail market, especially in the high-end consumption segment, has shown signs of slow growth in recent years. Many luxury brands have seen their sales growth slow dramatically, and even domestic consumption hotspots have started to shift from first-tier cities to second- and third-tier cities. In broader consumer goods markets, many people have begun to cut back on spending, especially in families burdened with mortgages and car loans, where consumption has become a luxury. Returning to the Beijing-Shanghai High-Speed Rail, we can see that, even though this line was once a source of pride for China's high-speed rail, its future has become increasingly uncertain as the economy slows and consumption demand declines. For the Beijing-Shanghai High-Speed Rail, raising prices has become an inevitable path, but the bigger issue is that even with price increases, passenger demand may not keep up. Will the Beijing-Shanghai High-Speed Rail be able to maintain profitability like in the past, or will it become one of the losing high-speed rails in the future? These are questions worth contemplating. As China's economy gradually shifts from a high-growth phase to a low-growth phase, infrastructure construction is no longer the only driving force for economic growth. The iron and public infrastructure model, which relied on large-scale infrastructure in the past, can no longer sustain China's economic growth. Projects like high-speed rail, which are highly dependent on economic growth, are increasingly showing their vulnerability. In summary, the weakness of the Beijing-Shanghai high-speed rail is not a random event. It is part of the broader slowdown in China's economy. The past model of relying on iron and public infrastructure to drive economic growth is becoming increasingly ineffective, and public confidence in consumption is significantly declining. Many industries, including high-speed rail, automobiles, and consumer goods, are facing the challenge of shrinking demand. The future economic situation in China may be more difficult than we imagine. Whether it's the government's stimulus policies or infrastructure investment, it's hard to reignite the engine of economic growth in the short term. If this trend continues, we may see more industries fall into crisis, and more businesses may exit the market because they can't achieve profitability. For ordinary people, life will become more difficult. Insufficient purchasing power, stagnant income growth, and unequal social distribution will be major challenges for China's economy in the future. Meanwhile, the contraction of infrastructure projects could lead to employment difficulties for many enterprises and workers, and the unemployment rate may rise further. In the long run, an aging population will only deepen China's economic difficulties, creating a vicious cycle of labor market tension and sluggish consumer demand. The decline of the Beijing-Shanghai high-speed rail, while seeming to be just a part of the transportation industry, is actually a microcosm of China's broader economic decline. As the pressure of economic downturn increases, the old models of growth will gradually become unsustainable. We can see that infrastructure construction is no longer the key to economic growth, and the low levels of consumption and private investment will inevitably result in weak economic growth. China may enter a long-term period of economic stagnation, with many industries facing unprecedented challenges. For ordinary people, this trend may mean continuous rises in living costs, stagnant income growth, and declining consumer confidence and willingness to spend. Although the government is still trying various measures to stabilize the economy, the current situation suggests that a significant recovery is unlikely in the short term. China's economic future is increasingly uncertain, and we must be prepared to cope with a prolonged period of economic stagnation. Hopefully, as we face this uncertain economic environment, we can take a rational view and manage risks effectively. It's time to subscribe to our channel. See you in the next episode.